Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a market update for today, Thursday, November 2nd, the day after FOMC yesterday. Oh boy, we got big news. I have a lot of details on yesterday's Powell's sentences. I'm going to provide you with a detailed analysis of what he said and why we are so bullish today. I'm going also to review the fundamental data as always, and also the earnings, and of course technical analysis, because today is really interesting. A big gap up is quite tricky for you to trade, so let me give you some recommendations for today. First, we are going to start with the fundamental data. Initial jobless claims came way higher than expected. We were expecting 210,000 and we got more than that. Also, continuing jobless claims way higher than expected. So big good news. But watch this. Productivity way higher, 4.7%. We were expecting 4.1%. And labor costs going into negative territory. So higher jobless claims, check. Higher productivity, check. And less labor cost, check. Oh boy, this is a perfect storm for bullish sentiment. More than that, we got earnings yesterday, PayPal. We got today Palantir. And we got also Starbucks and Peloton. So first, PayPal. PayPal was light on revenue forecast, but this is tied with the consumer spending and consumer credit. And 108 on EPS versus 96 cents, and also going a little bit higher on revenue. I mean, look at this. This was the earning calls. It continuing higher. At the open, we touch some ground, but then look at this big reversal, and it's actually holding. It's barely flat on the day, but we are holding yesterday's gap. So on the daily, we have a big fat doji candle, but we are 6.71%, really big for PayPal. Also, Starbucks. Starbucks is also consumer spending, 10%, because a lot of people is still buying coffee even though they hiked prices. 106 versus 97 cents, 9.37 versus 9.29. And look at this chart. 10% on the day for Starbucks. We were gapping up, and the most important thing, huge gap, is that we are holding. We are basically in a channel. We are not going down, we are not going up. That might happen in the upcoming weeks, but I think 10% on the day is quite crazy for investors. The second one of consumer spending related stock crashing earnings. And we got more. Palantir, 21% with quarter results estimate beat. 7% versus 6%, and 558 versus 556. Another huge chart, 20% on the day, holding the big gap on earnings, a little bit of travel at the beginning, and look at this, we are holding. Holding gains is also good for these gaps up, so don't underestimate that potential. And finally, Peloton, it reported bad news on paid subscriptions. Initially, it went down, but look at what happened. There's a lot of people investing in these names. This is Peloton, 14%. The big move lower, but slowly grinding higher. I think there's a lot of people trying to buy these names. 14% on the day for Peloton. So 4 names crashing earnings, coupled with the fact that today we got also 4 data, economic data, 4 readings quite higher than expected and beating estimates, Wall Street's expectations. And also we got Powell's statements from yesterday. Let me tell you, Jerome Powell yesterday said a lot of things that he already said in the past, but the timing is perfect. They obviously have to adjust policy as appropriate if risk emerge. For example, financial conditions, for example, another war, for example, high debt. But the vote in favor of yesterday's pause was unanimous. Unanimous, everyone is aligned, and that's really good. Economic activity expanded at strong pace. The job gains, the labor market remain strong. We all know that. Given how far we have come and amid uncertainty, we are moving carefully. They are going to think twice about over-tightening the policy. The economy has expected well above expectations. Everyone wasn't expecting this strong consumer spending. That is going to avoid recession, that is going to provide a lot of growth on the GDP, but it also causes a little bit of issues on the inflation, labor market remain tight, and these things, prices continue higher, but they acknowledge that the growth, the economy, it's better than expected. There's a long way towards the 2% target, that's obvious, and we are attentive to recent data showing resilience of the economy. This resilience may provide us with a little bit of confidence to avoid any kind of recession, not even hard landing, not even soft landing, anything, because the Fed acknowledged that they didn't put back the recession into the baseline. But further interest rate hikes might be appropriate, might be warranted if things are not going as expected. If inflation does not progress as expected, they are going to hike again. Don't doubt that one. They are not confident in that the policy is sufficiently restrictive. Maybe they are going to think that another hike is needed, but I think the risk to the upside is higher than the risk to the downside. I think this is enough tightening and perhaps another hike, who knows, but they are proceeding carefully. That's key to understand. They are watching long-term yields, so that's new. That's interesting because long-term yields also provide further pressure and tightening to the economy. So maybe they will not have to hike any more because long-term yields continue crashing higher. And finally, they are not thinking about rate cuts. They are not thinking about any rate cuts, but markets are pricing in May or June 25 basis points. Let's see what happens with Wall Street's expectations, but they still believe that slower growth is going to happen, but the rate cut is not on the table yet. So that's Jerome Powell statements. We got nice economic data, we got nice earnings, we got Jerome Powell saying decent things, unexpected things for Wall Street. So then what happens? Well, we gapped up like crazy this night. Look at this gap. We gap up, this was the gap up. We didn't even touch any level from yesterday and we pushed higher like 200 points. We are right now at 14,996. We tapped 15,000 psychological level up here, and that was my initial target. Why? We have to go to the daily to really understand the context. We got this previous support, is now resistance. We look below, look at the 200 moving average. Yesterday we got a big push on Powell, but the interesting thing that I want everyone to watch is this pivot. This pivot is a daily pivot at 14,950, and it's also last week high. It has confluence with two moving averages, but this target, this level was my initial target. I mean, like since the beginning of the London Open. I was long at the London Open. I took some profits at this, I think it was 80s, 87s, like around this zone. Because on the 30-minute chart, I got a lot of resistances up here. Look at this. All these red lines, apart from visually saying you something is here, there's a lot of people short here. So that's why we are trying to go slowly into this, and I don't want to get caught. So I took profits in this push, and we continue higher. And the tricky thing, the difficult thing when we gap this much into the open, this was the pre-market high into the open, is that there's a lot of participants that are not in the market yet. And those participants are big. I was expecting this double top at pre-market high and a move lower. Until when? To where we can establish maybe some longs to buy the dip intraday. So that's when you have to take setups like the opening range, look below and fail, and also when you are also in the opening range, then you have to wait for the major resistance at high of day. So at high of day, we also got a lot of choppy action. So if you were not long down here, it's not good to be long up here. So we have to wait. And I took another long on the key daily pivot that I mentioned early and last week high. This look below and fail. Remember the blue line and the blue dot line. When we reclaim pre-market pivot, the dashed line, when we reclaim these two lines, I took a long up here and I took it off at 15,000 just a couple of minutes ago. Nice long, slowly grinding higher. I don't usually like this kind of price action, but once we clear all this chop, I think investors are going to jump into the hype train and continue moving higher. So the tricky thing today is how we close today. We need to close above this pivot. Right now we have a strong green candle, but we have to remain up here for me to keep me interested, because that way we can have some kind of structure here and push towards the descending trend line into the breakout, into this breakout. If not, well, for next week we got the pullback, we got the reclaim, and we got the breakout. But it's super important to clear this pivot. We don't want shorts anymore at this level. We want them squeezed, and for that we have to wait for the close today. Correlations with this, well, dollar is a really interesting one, because I was watching this gap down on the dollar, I was watching this support and this support, and unfortunately we went lower. But look at these buyers, look at these buyers. Dollar had a nice setup short that I took on my Forex account into this wedge. So the retest failed into lower. So since then, look at this short below any kind of daily level, but since the open on equities, we've been going higher. So I don't like this kind of thing. Dollar, it's finding some buyers. It's not strong. It's basically 0.51 in the red, so quite a red day for the dollar. But don't get me wrong, buyers are stepping in and buyers are pushing towards this 106.1. So ideally, the best setup for me for the close today, it's for the dollar to find a little bit of weakness below that daily level, and the Nasdaq to keep holding this daily pivot. That would be perfect for me. Other things, the Russell long term was a clear picture buy down here. It's not quite dangerous to see the long-term support that we got here, and I think a lot of small caps investors buy this level. That coupled with the fact that financials are also super strong today. Look at this push. Look at this push. Really, really interesting levels. And also, last week on Saturday, I put a weekly recap, and I mentioned that also in this week's video, that We failed to support, we look below, look at the 200. This is the 200 moving average, and then we reclaim. This was a beautiful level for long-term and swing traders. I think that was quite decent. If you miss this trend, don't worry, because I think we are not going to go straight into the breakout. We are going to see some pullback. So be aware that for me, this look below and fail gave the opportunity to a lot of long-term participants to step in. And those have big accounts, and they are going to continue pushing towards this kind of level. That's for the midterm, towards the end of the year. But for now, congratulations, bulls, because we got a tricky day, gapping up so much, but at least we didn't lose big time. Sometimes we gap up and we lose everything. Today we are holding on the highs. We need to watch closely this close, but I think we are quite good for tomorrow, because tomorrow it's also a big day. Coming up on Friday, we got non-farm payrolls and unemployment rate. We need to stay flat on unemployment rate, and non-farm payrolls need to go really lower. We need to see less and less payrolls to really give the wage pressure cool down. We need to see less money, less payrolls, less wage pressure to finish the week on the highs. I think these two numbers tomorrow will provide you the opportunity. If they come out decent, I think we can have great trading tomorrow and a crazy day into the weekend. So be prepared, because if you missed today's price action, if you missed anything today, leave to trade another day, because tomorrow there will be more. For sure, plenty of opportunities, so don't lose to FOMO. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, support the channel. I put a lot of efforts in these videos. I share a lot of things, so thank you for the support. Thank you for the likes and the subscribers. And I would like to mention that I put videos every single day for market forecast, market updates, and market recaps. I also put one weekly recap on Saturdays. Last week's video was really interesting, mentioning these levels for long-term investment, so give it a check if you didn't do so. And this Saturday is going to be amazing. I'm going to review everything of this week, because this has been crazy. So stay tuned for new videos. Remember that tomorrow, Friday, we can have a really nice day of continuation if economic data comes out good. So be prepared, because tomorrow there will be plenty of opportunities. Remember that discipline, patience, risk management, those are key for your success. Without those, you will not do anything. Stay safe, everyone, and see you tomorrow.